Greetings, everybody. This is Jeff Scott. As you can see, it's 10:51 on Sunday, February 18th. This is my weekend review. As you're probably well aware, the markets are not open tomorrow. We'll take a look at futures in a few minutes. I can tell you that they were strong earlier this evening, and they remain strong with the Dow up fair value over 115 and the NASDAQ about 32. So I titled today, we got the rally, now what? And if you've watched me last week and my midweek comments, I thought that we would rally. We rallied a lot more than perhaps even I thought I would. We set some pretty significant overbought conditions that I showed you, I believe, last week. So what do I think is going to happen this week? As always, for education purposes only, I'm a doctor, not a broker. I'm independent. I paid for all my tools, and trading involves risks. Be your own guru is how I like to think about trading. I'm not a guru. You need to learn to be your own guru. That means get educated, learn from smart people, and put together what works for you. I started with CanSlim, as developed by O'Neill, improved by Morales and Catcher, taken to the computer by Ian Woodward and Ron Brown. This is my buddy George Lee. I believe April 9th, that weekend and Monday, I'll be doing a trading seminar with George in Orange County. I should have details of that to share soon. Looking forward to that. George is a great guy, great teacher, and I have a lot of fun sharing the stage with him. Dan Tharp, the king of money management, and then my buddy John Person, whom I first got to know when I bought his software. And like a lot of things I buy, I didn't use it for a while. Then one day I started listening to him at a Traders Expo, started playing around with his tools, read his books, went to a couple seminars, and said, boy, this is how I trade. And it's really an important part of how I find the stocks that I'm interested in with CanSlim, and how I use John's work to actually pull the trades. I own a lot of different programs. We'll talk today a lot using TradeStation, Thinkorswim, and HGSI. EdgeRater is a great tool as well for analysis. Yes, I do seasonality, aka Netflix trade. I've got a whole host of those that I share some of them. Can't give away all my secrets. And then a number of websites that I use. Here is the website for highgrowthstock.com. The key things here is it's a free 30-day trial if you're interested. I don't get anything. This isn't self-promoting. I think it's a great tool, and if you go under investing strategies, you can see hundreds of movies by myself and Ron Brown and others. Stock patterns are cyclical. I feel like a broken record. Every time we run up, we pause. It looks like we're going back down. We bounce back up. Well, this time we got our correction. Will this put all the naysayers who said we needed a 1, 2, 5, 10% correction to bed? Maybe. And for those that did follow me the last couple of weeks, we went exactly to my low bar or my low road. In fact, we hit and reversed at the exact point that I had predicted, which is luck, because nobody can give you the exact number. It was more of a range, and we went right into it. So it looks like we've got potentially another leg here, or do we pause or give back some of last week's gains? I think this is a week of indecision. So that means I have to start thinking about being careful, and I'll adjust my portfolio as needed. I think really I have to look and see what the market gives me. It really was strong last week, and I'll show you some data to support that. Here's Friday sectors. It doesn't show up very well here. I apologize. What I wanted to point out was utilities were strong. Healthcare had some red here, yet biotech was weak. It really is kind of what you'd expect on a day when you had at best a mixed emotion in the market. I had some computer problems. I mean, you can see it's probably better looking on TradeStation, and I'm going to have a comment, frankly, about TradeStation as well today. Do be very careful this week. You're going to find that TradeStation has now gone to a new version. 10, if you're in 10, they're forcing the update to version 8, and all of your prior radar screens are not going to work anymore. So hence, I had some really significant issues this weekend, and knowing how I am, but I'm not the only one that's going to find out some surprises. So just looking through here, we'll start down here. Home builders mixed, materials mixed, energy mixed, financials mixed. It was just a mixed day as you look through the market. Now we'll pull down here and see financials were there, technology, everything looks mixed. It was a very mixed day. The Dow closed up, the NASDAQ closed down. The only thing that wasn't mixed is utilities were strong across the board, as were consumer staples, and biotech was weak. If we go look at Think or Swim at the major markets, I'll make a couple comments here. Let's see, is this going to give me weekly or daily? It's going to give me something, I hope. Come on. Here it comes. This is going to give me daily, so let's expand it. So we'll play with Fibonacci's, I guess, once. And I don't usually use it on Thinkorswim, but I know they're here. It's a regression channel. That's a channel line. Fibonacci time, Fibonacci extensions. So here was the high. Here was the low, and that's not exactly what I want to do. So I'm gonna wait and do that in HGSI, because I think there is a point that I will make when I do that. So let's just go back and open this back up. So you had a pullback from 28.75 down to in the 25.40 range, 25.30, and we moved back up to 27.45. You could see up until here we had a big move up, but here was that correction that perhaps a lot of people were looking for. So we had that deep correction, bounced up above the 50 here and closed strong. You could see we closed at the top of the range. Forces are positive. We had a pocket pivot volume and a daily bongo is green. So the E-minis look strong on Friday, as did the NASDAQ. And this is actually, the NASDAQ was down Friday and it's up today about 21 points so far in the futures trading. So NASDAQ trading back above its 50. Sort of the theme here, the Dow trading at the 50, closing Friday with the doji, trading up above that today in the pre-market. The IWM closing right below the 50, but also a big move up from 142 up to 153. The VIX continues elevated, but moving its way down consistently. And the dollar looks like it's bouncing a little bit here. But really, as you'll see on the weekly chart, really had a very weak week. That sounds horrible. We go down and look at my weekly futures. And very quickly, because I think the key thing I want to look at is the dollar. But if I was to look at any of these, you'll see a big retracement on the weekly charts, the E-minis, the NASDAQs. This is the weekly chart here because we're now into the new week. The Dow, the Russell, huge week on the IWM. The VIX, a big down week with the market improving. And as you can see, I mentioned the dollar had a strong negative week. Weak dollar has been supportive, I believe, for this market of late. And then if I look at in my Genesis, where the top row is daily, then weekly, then monthly, the first column is the E-minis, then the NQs, then the TFs, the NYSE, and the YMs. One can see that on the weekly charts across the board, we didn't have exactly an equal and opposite because we never opened at the very lows. We gap up, but we opened near the low of the close, and then we traded up the rest of the week. Strong week for everything. Dailies turned into buys. Weeklies are still, for the most part, sells, and monthlies remain in longer-term buys. Now, a little background for the week. Both the 10-year and 30-year bonds pushed much higher. What is this level here? This is 3%. 3% is when I get nervous on the short-term bonds. I just tried to identify the level that seemed to correlate with weakness in the ultimate market. Um, Rates that are too low sort of scare us because we think the economy is worse than it is. And rates that are too high, we worry about shutting down the economy. So you got to be like Goldilocks, just right. AD lines in white reversed higher. I'll show it to you on a better slide in a second. Yellow is the S&P. With both small and larger stocks, we saw a big reversal in the AD lines. Here you could see in dark white the NYSE AD line. Then all my market ETFs turned up, and the weaker one here is the bonds, the TLT. Breadth rebounded dramatically on both stocks above the 200, above the 40, and in the new high, new low ratio. Now, if you go back and play last Friday, or last weekend, I said we were going to reverse. And the reason I said we were going to reverse is because of the new high, new low ratio being so low. And we did. We're getting up to overbought, interestingly. But as we've seen in the past, this isn't the range that says we have to pull back here. Daily McClellan, the oscillator crossed back above the midline. Interesting how low the summation index is. We were not, well, we did get an extreme the prior week here on the daily, but when we looked at the weekly, we weren't at extremes. Current buckets give me an idea of the breadth of the S&P 1500, looking at how many stocks in the S&P 15 are below the midline in their Bollinger Bands, and you can see it's 68%. So we really are not as overbought as it feels after last week. The buckets show that the majority of stocks are sitting around the midline of their Bollinger Bands, very few above and below. And we can look back and see what we saw last week if I have time. HINDY free zone on the NASDAQ and the NYSE. We've had no HINDYs in the last 2 weeks as we worked off the volatility of the market. Ultimately, your number of new highs drops so that you don't see HINDYs anymore. What's interesting is we're starting to see more new highs and less new lows, which is good for the longs. Market tone, we had a whole row of kahunas, and it took several days, but you could see under the Woody indicator that all the major indices are green. Why is this painted yellow? That sort of plays to the fact of the increased volatility in this market. The other thing that turned green on the Woody indicator are all the sectors. Again, a big change over where we've been. So clearly evidence of strengthening of the market, but interestingly, not so overbought and overheated that we have to reverse. If we look at my 3 indexes that I have created or were created to give you a sense of what the market's doing, to give you an early warning signal, they all mimic the market. 1, 2, 3, 4, 5. The Canaries had the big turnaround day on the 50, and I think last week I said setting up for reversal, and it did. Now with the doji up here, are we losing momentum? Who knows? We'll see. Same thing with the index, started June 27th. Doji on the 50 and a move back up. And then what about my melt-up index, which really didn't last long because these stocks were all very overbought. And you could see it's sitting on the 50-day moving average and really looks like it's stalled, but it could be setting to run. So we'll have to watch that. So what does this tell me? It tells me that all my alerts have given me a sense of what the markets are going to do. I've had a nice recovery. It did give me the clues, especially when I look at the E index and the Canaries, that we were getting a reversal signal on the prior week. Know your news and earnings. Markets close tomorrow on the news front. You got some auctions on Thursday. You got Baker Hughes rig counts and Fed speaks. Looks like a relatively quiet week. On the earnings side, it's not so quiet. We've got BHP. We'll talk about steel in a few minutes. Walmart, Duke Energy, Home Depot, Intuit, Barclays, Royal Bank of Canada. A lot of big companies with earnings. This isn't an all-inclusive list. You need to know your earnings. And one of my favorite statements is it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your earnings date is scheduled. So, market staged a broad-based rally as we predicted. The indices ran a huge move, 4.3 to 5.3% of the week, and we're getting about half the losses, but seem to be stalling at their 50 days. Although, as I mentioned, the futures don't look like they're stalling, but unfortunately, we won't be trading much for another 24, 36 hours. Steel and aluminum stocks, I had both CENX and U.S. Steel. They both had major rises as the U.S. Department of Commerce recommended tariffs on imports. Tariffs go both ways. What will happen when China or other places counter us? So that could be good or bad. The weak U.S. dollar should be supportive for stocks. And at some point you need to have a consolidation. And a pause and consolidation here would be great, but I'm ready to trade whichever direction the market moves. Right now, it seems the path of least resistance is going up. Use my usual top-down agenda. Here's an alert for TradeStation users. I'm an early adopter, and therefore I went to TradeStation 10. I knew, or I was aware, that in Update 8, they changed the format of the radar screen. It supposedly is an improvement. I am sure it is an improvement. I was not updating to 8 because I didn't want to redo all my radar screens. Well, folks, they did it. And if you are using 10, you will get updated without trying to be updated. I think they've got an auto update feature now built in. And I've had just a devil of a time redoing my radar screens. If we go into where I usually go in here, let's see where it is. Market force and divergence, and we look at the key indices. Everything here is different. We look at the E-minis to start with them. All right, hopefully everything's going to match up here color-wise. Let's see. And we could see we had a buy signal come in. This is that today? Yeah, that's today. So we had a Friday, Thursday, a buy signal came in Wednesday. We talked last weekend about the drop below the envelope was suspicious. We got a buy signal, still in a weekly sell, monthly buy. We're now green on the daily. Clearly, it's a buying opportunity as I see it, although right now it's a counter trend because the weekly is down. The high jump, which was at 100 and then down to 0, is now in the midline. This looks like the market can go up, and that's the way I'd be leaning. I'd like to see us switch on this, and I think a little bit move up, and we'll get rid of that relatively soon. But it does show a weekly sell signal, which may take a while to go away. The NASDAQ futures. All right, I've got to change this to blue, I think. There we go. NASDAQ futures, interestingly, still in a daily sell, weekly sell, but you've got a green here. You'd certainly expect a change soon, so that's interesting. Remember, it had a down day on Friday. The Dow futures in a buy, looks like the S&P. This is the mid caps. Again, the similar green in the up arrow, but a weekly sell. Let's add to this one because I'll be coming back here again. Data, insert. What I want to do, add symbol, add blank row. And then we're going to put here at TF. See if they still give that to me, the Russell. And you can see the Russell is actually in a buy signal. So the one that's not is the NASDAQ. Hopefully that's an app. Oh, nope, I take my back. It's hiding there, but it's there. So we do have a new buy signal on the NASDAQ right here. There it is. So with NASDAQ, so all my indices on the short term are in the buy. That's what I would have thought. Just very quickly, home builders. Let's just look at the daily. Still in a buy signal. Materials. Still in a buy signal. Energy. A new buy signal. That's interesting because it's been weak. Financials. Still in a buy. Notice the weekly sells across the board. Market sold off hard. Industrials in a buy. Technology. I have a feeling it's got the same issue as the other, but right now it looks like it's in a sell. That's interesting. So that would be the weakest. Staples in a new buy. Utilities in a buy. And healthcare in a buy. So really we're in a very, and then discretionary looks good. We are in a strong market, even after that big sell-off. All right, let's go into HGSI, Woodward and Brown user groups, major markets plus. Let's put the T top-down view, and it shows small caps come to the top. Weakness in transports, gold, silver, and some of the larger caps. That's interesting. Let's just take a look at some of these major markets. Everything looks funny when I start because I had to change my resolution for the videos, which is a pain in the butt, to be honest. So this is kind of fun. This is from last week, so let me show you what I'm looking at. We were in a box here, and let's see, take that box off because I think I put that in. I don't know when I put that box. But anyways, we pull back here, and if we start doing with some math here, when we were at the high, one of my scenarios was a pullback to the 200. That doesn't take rocket science. That was my low scenario. My medium scenario was a pullback to the 50, and the high road was to keep going higher. We pulled back to the 200, and that gave us a correction of, among friends, I have no, hold on a second. That gave me a correction of, give or take, 12%. I then put, from here, do we break out to new highs, or do we work our way up to the 50 and then consolidate? So at this point, we still haven't decided whether we break out to new highs, we consolidate around the 50, or do we pull back after a small rally? I think either going up higher or we consolidate. I think we're done going down right now, but that's just my guess, and we'll see where we go from that. Now let's go up here to a cleaner chart. So we did get the pullback, which we talked about. This was a bingo, which is the baby out with the bathwater. The next day we tapped the 200, and that was time to reverse. That's the S&P, and very quickly we'll look at the others. The Dow looks a lot like the S&P, but did not quite get down as far to the 200. The NASDAQ composite. Here's my scenario. You see the box here? This is where the top of the box was on that dash. And where did we come down to? Right exactly to the top of the box, and we reversed. So the NASDAQ looks like the same as the others. It's above the 50. And again, does it consolidate or it go higher? And then the Russell 2000, which undercut the 200 by quite a bit, and then had a reversal, and right now struggling right under the 50. So the indexes have all had a big move up. We've already seen that. As always, I like to look at four other things. The dollar, as I said, the dollar's been weak. If I just put this on a weekly chart for the heck of it, you can see how the dollar has come down. And in fact, from its highs to where it bottomed on Friday, it's dropped 14% in 58 trading days over the last 3 months. So the dollar weakness, and I think that has been part of this, what's been so supportive for stocks. The VIX, as we talked about, is elevated still, but working its way down. It ran up to where my arrowhead is on the weekly. Obviously, here I'm looking at the daily, and you can see after it peaked here around 50, it's come down. It's still elevated, but the trend is certainly down, although that could change obviously anytime. Volatility is higher than it used to be for the last many months and maybe longer. Gold and silver, right in front of my face is the best place to hide something. With dollar weak, gold moved back up over the last couple of days, perhaps a little flag there. Silver not as strong as gold, below the major moving averages, and gold miners reflecting more of silver, look than it does of the raw metal. So I'll just stop here and say, where do I sit on the markets? I think it goes higher, but I'm also concerned it goes sideways. I feel pretty good that we've had the correction everybody's been calling for, and I'm certainly not calling for it to have a big reversal to the downside. But that comment is good, reasonable, and effective for the next hour. And then we'll see. No, really, it changes and is volatile. But my guess is we go sideways or go higher. And that's not just because the futures are higher. It's because of the rally we had. But at some time, you would expect a pause in some consolidation. Next, I drop down to 0.7, which is industry groups. I see I have 173. 2-day force to the upside. Here's steel benefiting from the potential tariffs. 75 to the upside. If I look at a longer window at 5 days, I've got 87. If I look at 2 days down, only 18. And looking at what's in here, midstreams, some semis, refiners, marine shipping, specialty apparel. And if I look at 5 days down, I have 7. So clearly, over the last 5 days, this has been a market moving higher, not a market moving lower. So I will usually start by going through the top 10. So I'm going to try and do this relatively quick because I'm tired and I've got an early flight tomorrow. No day off for me for President's Day. U.S. Steel. This is indicative of what happened with steel. You had a positive tariff ruling. Now, it had a huge move on Friday. It was a very good buy signal here on Friday, Monday and Tuesday breaking above the 50 with the mobile breakout. Now the weekly bond goes green. Great earnings per share growth. Look at the demand versus supply on U.S. Steel. AK Steel, not quite as good, lower in the pattern. Also a lot of demand. Nucor, nice buy point here. Would have been nice to have bought it at 66, not 70. But mobile breakout on Thursday, and then a pocket pivot and kahuna on Friday. Bongo flip to green. Steel Dynamics also looks good, breaking out to a recent new high. And wow, that's weekly. Looks like it might be breaking out to an all-time high. Is that possible? Yep. Steel Dynamics breaking out to an all-time high. Great earnings per share growth. Pays a small dividend. Steel looks good right now. Do your own research. Exploration and production. Weak dollar helps this. Perhaps there was some stabilization in oil last week, but we're going to see a bunch of stocks that are bouncing but are down in the lower right-hand corner, not winners. These have been losers trying to turn it around. Do any of these jump out and say, buy me? If they do, you're buying them because they pull back a lot. This is probably one of the stronger ones. This is FANG, moving left to right on an upward trajectory, but still had pulled back pretty hard, bounced with the market, great earnings per share growth, twice what the multiple is. Laredo, another one, lower right-hand corner. Hard for me to get excited by many of these. That's an interesting earnings per share growth for PDC. At least it popped above its moving averages. So these are moving up, but they're moving out of low bases. REITs, interesting to see these with the rising interest rates. Several of these have been beaten down. Now here's an interesting one, American Tower. It's an expensive stock. You're buying it of the mobile breakout right at its major moving averages, pays a 2% dividend. Expensive stock, great earnings per share growth. Brixmor Property, don't know this one as well, down in the pattern. Crown Castle, I think another one that does cell towers. Let's see. Yep. Sitting on the 50, 3.8% dividend. Kimco. So again, does any of this jump out to you and say you have to have these? No, you're buying them perhaps because you like a 6% dividend. Perhaps you're buying them low. Perhaps over time they go higher. But with rising interest rates, these are not without risk. But Kimco, you're clearly buying in the lower end of its scale. This is Welltower. I'm sorry. Same thing. All right. Biotechs. They had a mixed day. Now, this is an interesting one. I know very well AMAG. They had a week that looks like they're getting acquired, but no, what happened was they had two sets of positive news. They've had a recent expansion of the label on one of their marketed drugs, and then they just had another formulation of their other marketed drug. This one helps keep pregnancies intact, and that gives them more patent life. And you can see the stock had a nice move on it. This is one that I may nibble on, not because of earnings per share growth, but because the story of the patent extension on their critical drug will probably get people interested. It had a viable gap up, which means I'm not going to let it risk getting down to the 50. I'd probably give it to the red as my stop. I'll be looking at AMAG, Amgen. Let's see if anything jumps out. Sarepta is at least in an uptrend. They have a muscular dystrophy drug, kind of a very controversial approval. Doesn't make money yet, but it's a leader in muscular dystrophy, currently in an uptrend. Bluebird Bio, this is probably the next big takeout, but it's already an expensive stock. Celgene already has a position in here. The market cap $10 billion without a marketed drug, but what a beautiful pattern. This is when it got interesting here, when it broke out either here or here off the 50, coming out of a squeeze, and it's had a very nice run since. It's a little bit too expensive for my taste. Immunogen breaking out a cheaper stock. Notice these don't have earnings. Vertex has earnings, but it's been really going sideways. Oncology looks interesting, breaking out. Again, no earnings. So biotech, for the most part, are mostly stocks there that are losing money, but with a lot of stories. Large pharma, they make money, and this has been one of my favorites. I know somebody got into it. Let me tell you, I've been preaching AbbVie since back here. This is what I like. Kahunas, pocket pivots, mobile breakouts from a squeeze in a weekly bongo green. You had another opportunity to get into it over somewhere in this range here. You had some touches of the 50 in this range here, and it just took off with earnings. What I like about AbbVie, it's got the science of a biotech with new drugs and excitement and pays a dividend like a pharma company. Look at the earnings per share growth versus the PE. I think this is higher. I don't think it's too late to buy AbbVie. Bristol Myers Squibb, big breakout on some positive news for their lung cancer drugs on Thursday, setting up perhaps a shooting star. It looks a little bit ahead of itself, especially when you compare it to its brothers. It doesn't have much in the way of earnings per share growth. Pfizer, big dividend at 3.8%, sort of flat on earnings, but you can buy it around the 50. J&J, a little further in the pattern, but the story is the same, pays a 2.5%. And here's Merck, pays a 3.4%. So it's interesting, as we look at the industry groups that are in the top 10, steel's breaking out to new highs. Explorers, REITs, the biotech, the large pharma are all coming out of some deep pullbacks, which is interesting when you consider how strong the market is. Some of the big winners of tax reform and rising rates and reduced regulation are regional banks. So a number of these made my list this week. U.S. Bancorp kind of loose, so I'm not interested. SunTrust, a little bit more interesting. Looks like it's breaking out to go higher. Good earnings per share growth, higher than the PE, 2.2% dividend. Zions Bancorp, similar pattern. I don't know this one. I think you probably have to have some exposure to regional banks in your portfolio, and that can be done by buying an ETF such as KRE, which looks a lot like the stocks, as it should. Application software, you had a lot of beats in here. MuleSoft, don't know anything about this company, had a great week, mostly driven by earnings per share beat. I'm not a chaser. You'd have to chase this one. Twilio, similar story. Bible gap up on strong earnings. Switch the weekly bongo to green. Couple of kahunas and away it goes. Again, I'm not a chaser. Synchronous technology, not so interesting. Salesforce, beautiful uptrend intact. Earnings coming out in 10 days. Look at the earnings per share growth starting to pick up in this stock. I bet it goes higher if these earnings are maintained, but it's not without risk. So there's some interesting stocks there. Intuit also an lower left, upper right pattern. So some leaders there in application. Telecom carriers, you buy them cheap for the dividend. That's how I look at them. CenturyLink was the cheapest of them all. I think people thought they were going bankrupt. They had good earnings come out. They make money, 11.4% dividend, but again, people aren't always sure they're going to be here. You look at AT&T, pays a 5.4% dividend. Does anybody think AT&T is going anywhere? And you're buying it where on the 200 weekly moving average, which has historically been a good place to buy. So why not load up on some AT&T, get some potential growth and a 5% dividend in a relatively safe stock if we see the market pull back. Verizon, similar story, 4.7%. Ring Central, a different type of a company. They make a lot of different technology. Beautiful tight uptrend. One of the leaders of the market had some good earnings with a Bible gap up, and away she goes. Looks like it's going higher if the market stays up. So that was a couple of interesting stocks. Generic pharma. I remember if there was some M&A activity here or what. I think there was some patent with Copaxone. I wouldn't touch Teva until it gets and closes above its 200. It looks like it wants to do that. Kahunas, pocket pivots, mobile breakouts from a squeeze, a weekly bongo green makes money, but these decreasing earnings, great dividend yield. I might be interested in Teva, but I got to see it break above the 200 and stay there. It's really deep in the pattern, and you need to know you're buying something that is not a leader. Mylan, pullback. I don't like any of those. And then one thing that should benefit from high interest rates would be insurers. And there are a couple here that I liked. It's just we skip Berkshire because, well, we can look at Berkshire. It's not that expensive. Uptrend, pullback here. Rates are going up, and it's had a big move up, including pocket pivots and Kahunas. Great earnings per share growth. This is progressive. I've been liking XL, which was a good thing to like, as it's had a nice move up. We've talked about that over the last couple of weeks. And in my holdings, this one also looks great. Tight, pull back to the 50 and a breakout on Friday with a Bible gap up. Great earnings per share growth, doesn't yet pay a dividend. So I think some of these look interesting as well. And Berkshire Hathaway doesn't look as exciting and pull back to the 50. On the short side, I didn't find a whole lot that I liked. Let's see if there's anything on my list here that's worth talking about. You know, there's some here that if the market was to turn down, but I'm not convinced the market's dropping much from here, and I'm not shorting in the setting of a big rally. But I have built some lists, like, for example, Endeavor. So here's a stock that's broken through the 200-day moving average. Now, the fact that it broke through and it could not break above, I find to be worrisome for this. If I go on a weekly chart, we're breaking through the 50 weekly. Do I think this stock potentially, if the market breaks down, can drop down to the $85 range from its current close of 96? Yes, there's a 10, 12 points very quickly. At the same token, I recognize that its earnings per share growth is great, so I'm just creating a list of stocks that would be candidates if the market rolls over. Here's Arista. Is this a long-term top? This is a stock that's had a huge run-up, who's made its numbers, but it's slowing perhaps its earnings per share growth going forward. I don't know, but that's one that I would look to short if the market rolled over, if I had signals to short. So again, just putting together a watch list. NetEase, another one sitting here now on the 50, and if the market rolled over and this dropped below the 50, I might be interested there as well. This is all weekly. I'm sorry. Let me go back and look at these on dailies. So, yeah, I switched it for Endeavor. Arista, you can see the big drop that occurred. It stopped at the 50. A further drop down perhaps puts the 200 in play. So I've done my workup. I'm going to wait and see what the market does. I am more to the long side than the short side. in my thoughts. These were some of the stocks that came out to me on my analysis. And if we just look at industry group, steel looks very strong. Banks, little pullback in Boeing is a buying opportunity anytime I see that. And then a smattering of other things. Here's that NMI Holdings. I guess just to show you a couple of things that I liked a lot. If you're into bottom fishing and you have an opening for a biotech or a specialty pharmacy, here's a stock that sort of died, was in the $17 range, had a kahuna breaking above the 50, a mobile breakout from the squeeze. It actually looks even better on my person signals. Let's see if I can pull that up. All right, let's see if this is even working anywhere. I'm having such a devil of a time with this. Where's my mouse? All right, so that's got to be green local. Let's see. Nope. Let me try. What I liked about Cala on the weekly, certainly on the monthly, you see the momentum to downside has stopped. On the weekly, I have a high close doji, and on the daily, I've got MACD divergence to the or convergence. I have a Bible gap up on Friday with a new buy signal. The only thing I'm missing is I'm not coming out of a squeeze. So I thought Cala looked very interesting. So that's one that I might be looking at buying something off the bottom. This was one of the higher rated stocks that I had. It's a paper company, which is not the most exciting. I don't know if it's an ADR. It must be because it's kind of gappy. But it broke above the PSAR, Bible gap up, mobile breakup from a squeeze. Kahuna in a pocket pivot and Kahuna on Friday. Great earnings per share growth, modest dividend. Another crazy play I thought from a bottom fish was High Crush. If I just look at from September to now, it's in an uptrend. But what was interesting about this is it pays a huge dividend. And Halliburton talked about how they're having a problem getting sand to keep up with the demand. They're one of the sand companies. So that's my list. Again, where do I think this market is going? My guess is it goes higher. I wouldn't mind if it paused to refresh and did some consolidation. I have to be aware that this can turn on a dime. The volatility can come back, but I'm pointed towards the long side. And I did mention that it was a great week last week. I always run this test. The S&P 500. I can't. It's probably a handful at most that I'll find the S&P having a 4.3% return. So then the question becomes, how does growth, which is where we live, compare to that? Well, the first thing you see is I had one group that was negative of 10 stocks. One group. That's nothing. What else do we have? We have the IBD 50 was up 5.71. The Investor Business Daily Weekend Review up nearly 6%. My stuff were up 6.6. The buy watch that I come out with was up 6.5. The Woodward Brown leaders were up 8.17. Even the bears, again, you don't buy bearish stocks or you don't short them in a super strong market. They were up strong as well. I guess the message is a rising tide lifts all ships, and we certainly had a rising tide last week. These were the stocks I went into the week with, and the big return was United Steels, my biotech bull. I was short the SVXY, and now it probably need to cover as it moved up some. Weibo was a big earnings play. Applied Materials had a good earnings play. Paycom, good earnings. Century Aluminum took advantage of the tariff issue. It was I can't tell you the last time I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stocks with 10% or more of a move. It was a strong week, and as I said, a rising tide should raise all boats, including yours. And as you can see, futures going at 11:25 p.m. compared to fair value, very strong. And on that note, have a great week. One of these weeks, I'm going to take a week off and not do this, but I do this as my typical routine anyway. So have a great week, and hope you stayed in the market and I kept you in. Bye, everybody.